Well, Alibaba is a Chinese e-commerce company that provides consumer-to-consumer, business-to-consumer and business-to-business sales services via web portals.
It has a market cap of $183 billion. It trades on a PE ratio of 17 and it pays no dividends.
No surprise that we're seeing a very similar theme unfolding. Obviously, these companies are not in a position to be paying dividends because they are high growth. They're aiming for that trajectory from a growth perspective.
Yes, and as you mentioned, you know, the first mover advantage, you want to tie up as many suppliers and end consumers as possible on your platform, make them reliant on it, and that's how you generate the significant earnings growth. So what I like about what Alibaba is doing is it's not just the commerce platform that they have, but they're also helping with distribution. They're helping get their suppliers a lot more smarter and linking them with the right customers and helping them advertise and market their products. So they're adding a lot of value there, and that will add to the stickiness of what's quite a business-to-business platform. Their key growth area and what we're watching closely is what's their penetration going to be like outside of China. So more than 80% of revenues come from mainland China at this stage. And yeah, if they get that right.
Again, this brings another discussion point into the stable, and that is that if you've got access to the Chinese consumer, do you really need to go outside of China? I mean, come on, isn't that enough? Isn't that an opportunity in itself?
It is massive and still very untapped. And you know, when you've got a middle class of 350 million, but still 1.4 billion people, you've still got so much growth going on there. I saw an interview with Jack Ma recently. He's the founder and executive chairman. And he said something very interesting, was a very good analogy. He said, if you look at China, it's like the growth of a person. So you grow physically and then you stop growing physically. You start growing your mind, your culture. So I think that's the phase that the Chinese growth story is getting into. It's done if infrastructure build. Now it's going to start becoming a service-based economy, and Alibaba is perfectly positioned for that.
So if you want access to the Chinese consumer, then Alibaba's got to be your place to start.
Yeah.
Let's have a look at the share price performance.
I think a lot of that uncertainty, you can see it had a good listing, popped to 120, and then sort of China came into the spotlight. The Chinese stock market was all over the place, and then a lot of sort of concerns about Chinese growth, and I think that's what we've seen.
So are we being presented with a key buying opportunity?
Byron, I'd argue potentially yes. I mean, the scale of the volume that flows through their platform, they're targeting $1 trillion of gross annual revenues through their platform in a couple of years' time. I mean, that's incredible. And yeah, as an investor, you want to seriously assess if you want a part of that.
So Byron, come on, ditch Amazon and buy into Alibaba. I know you are invested from an Alibaba perspective, but how about putting all your eggs in one basket in the online? Just going with the Chinese consumer, there will be a recovery.
You know, one of the great things about investing is you can own both. And I think it's a good story to own both, because Alibaba, they've also got stakes in the YouTube of China, in Weixin, which is like the Google of China. So they're well positioned in sort of the internet world of China. And I get the feeling, you know, they don't have to reinvent the wheel. They can look at what Amazon are doing, so they can start creating content. They are obviously competing with Tencent, who own a stake in JD.com, which do a lot of the content and the gaming and so on. So there is competition in China, but there are still huge opportunities.
So we're going to say you need to hold both of these because they present such different opportunities.
And trading at 18 times earnings is a lot cheaper than Amazon.
Correct.
That's why I was saying this could be the deal of the century.
Yeah, different businesses. I like both, Byron.
Hot
for me. Hot.